30, I think it's something we're already mostly used to. Page 30, question number, for those that are not Dovian that started with Dove now, this might be a bit difficult for you, especially when you don't have our pack. So I would advise you also try and contact me for now, because it will be faster, you get more feedback from me than contacting my other people. Contact me, then let's make how you can get your own past question pack, because you need it now. So that's the truth. Okay, question number 3. Question number 3. Wait. No, let me finish my time. You know that I told you now. This class is a brain opener. Okay. Sorry, we're having disturbance in this class now. Okay. It says, the question 1 says, list the major items that must be entered in the debit and credit side of A, receivable ledger. So we've already listed the items here, isn't it? Good. And B, payable ledger. We've listed the item. I think we've answered that question already. So go to the next. B part says, briefly explain the condition under which trade receivable and payable ledger can have both side debits and credits. So I think that's the one we talked about, set-off. You know, if you remember, the set-off concept was having credit side on the receivable and debit side on the payable. And the transfer was having debit side on the receivable and credit side on the payable. So the two incidents that can occur where you have such is set-off and what? And transfer. Okay.
When they say explain.
Then when they say explain, then you now explain. You let them know that these are the two incidents. Then, for example, set-off. Set-off is a kind of what's called transaction whereby one account is being net off for another's account. You get? Or whereby one's debit side is being cleaned up for another credit side. You get? That's set-off. So in this case, you can now explain. In this case, for a trade payable account, but don't forget it's just 2 months. I would advise you, see, for this your account, or for any exam you are doing, always check the marks. If it's 2 marks, don't write more than 1 line. Don't waste your time, because it's time. This exam is basically time. I told you then. You get, so don't waste your time. Once you just say transfer and set of set, you have gotten your money and move. The C part is where we are going to now. I said on January 1st, 2006. The trade receivable ledger balance of Moyege. So the account we are preparing now is for Moyege. So the trade receivable ledger account. But before we continue, let's look at the requirements so that we will not be too familiar with the question. Let's look at what the question is asking us to do. Since the first 2 parts of the question has already told us that it's control account, let's look at the requirements. The requirement says, from the information given above, a total debt account, which is receivable ledger, and creditor account, which is payable control ledger, bringing down the balances at what? Good. So it means that we are going to prepare a ledger that is trade payable and that is trade receivable up to June what? 30th, 2016. Am I making sense there? So in order to prepare this account, you can come and now do something like this. That's why if any question you are giving on financial accounting, before you put your pen, always check the requirements. Before your pen starts writing on the paper, check the requirements. Because the date you would need is always on the requirements. Even though you are preparing partnership accounts, company accounts, the date you will need to prepare for the account is on the what? The requirements. So this is the date for this one now. The account is Moyege, Abi. Trade what? As at what date? Then the same thing for what? You do Moyege. Trade payable ledger. as at what? 30th June 2016. So don't forget your debits and your what? Credits. You get? So that's the first thing you have to do, because we must prepare the ledger. Please don't compound your book like this. You can do one in up, do the other one under. Don't share your book into two like this, please. And when you are writing, doing this kind of thing in the exam, make use of your book. Okay, quick one now. It says, like, make use of your space. Don't rise. They call it rise.
So sorry, if I want to answer this question, I cannot do like 10 lines or 12 lines.
10 lines for each of the. No, don't see. My advice is don't leave 10 lines. My advice is leave one page for one, leave another page for one. Because by the time you now leave 10 lines, you now see that, oh, this is, oh, you will not know. You will think you know. You will not cancel. You have wasted time. So for you not to waste time, leave one page for one ledger, leave another page for one ledger. The space you did not use, just put, no, sure, leave it. So long as you have started on that page, leave it. Just go on that page, PTO, turnover. Bam, and move on. Okay, now let's go. He said on January 1st, 2000, so on the first day of January, the trade receivable ledger of Moyege Nigeria Limited were what? 64,000 debits. Hello, can you see that there? Yes. So we come to the debit side, we say balance brought forward. How much is it? See your Naira sign up here. 64,000 debits and 256 credits. So it means that it also has a credit balance, isn't it? Yeah. 256. They will tell you. Now then I said why the trade payable ledger balance was also what?
34,500 credits.
34,500 credits.
236 debits.
236 debits. Now see what they now said. During the what? During the 6 months period ended 30, so that's the period that they ended now. These are the things that happened. They have shown us now. Let's see. Okay, adjust my camera. Okay, let's see if we can do that. Okay, I think we have adjusted enough. Okay, let me still adjust it more. I have more space in the other side. Okay. I have more space here. Okay, I think it should be okay now.
Sorry, but this is not affecting this one.
It's affecting the record.
It's not sure.
Okay, and leave you. I will. When we finish, I will. Okay. So now then I said, these are the things that happened between the 1st and the 2nd of this year, and June, of the year. Sales. Now, please, when they put sales like that, and you have an idea that what you are doing is control account, assume that it's a credit sales. But otherwise, if you see sales and you now see credit sales, please run away from that sales. Choose only what? Credit sales. Am I making sense there? Yeah. So we are going to assume that that is a credit what? Sales. Then the next one is say purchase, the same thing. If you see,
it's 11:15 a.m.
We started 10 now.
And it doesn't mean.
No, let me finish this one. I know if I ever stop the class now, they will be angry with me.
Brenda, tell him to.
They cannot. I know if I ever sick, I want to stop it, they will be angry with me. Those all I said the very best. Those all I will be angry. Okay, so if you also see purchase like that, you see purchase and you see credit purchase, go for the one with what? Credit purchase. So we'll come here and say credit purchase. How much is it? 157,360. Okay, then the next one is cash received from debtor. You know we said that before. So it's reducing debtor's account, isn't it? Yes. So we'll come here and say cash received. 168. So always try to understand your items and who it concerns. cash received from debtor concerns the business and the what? And the customer, which is the debtor. So you don't need to take it to payable. Now look at the next one. Cash paid to creditor. It concerns the business and the creditor. So you must picture all those things. So you come the cash paid. How much is it? Okay. Then the next one is discount allowed. Discount allowed is between the business and the customer. So it concerns here and it reduces the account. How much?
7040.
Discount allowed to debtor, but it was now subsequently disallowed. What does that mean? You take it back now. I allowed discount, it reduced my debt. And I say, I not allow again. I not allow again. What does that mean? You are owing me. Are you there? So to come back here. So discount disallowed. How much is it? So it's not everything you disallowed. Only the 40 naira out of the 7,040 naira. Can you see that? That's the only one you disallowed. Okay, the next one is discount received. You receive discount from who? Supplier. So you come here and say, how much? Return inward between business and customer, isn't it? Good. Please, I want you to be participating in the ideology, because by the time you are good to go with all of these terminologies, you are okay. You get it? So, return what? Inward.
Are you supposed to be there?
Sorry. Thank you. Return inward. So the next one called return outward. And the next one, bill payable. Payable. We've already said. Okay, the board is blood. Okay. Let me bring the camera a bit closer and clean the face of the camera. Okay, I think it should be better now. So they said bill payable, isn't it? Bill payable is 10,960. Bill receivable. Dishonored bill. Who has the right to dishonor bill? Who gave the bill? The customer. Are you there? So because they didn't put bill receivable dishonored. They said dishonored bill. The customer, the business is reporting that the bill they gave him or her is being dishonored. Are you there? So who gave them the bill? Customer. Good. So record that now. Let me take a question from Munachi. Yeah, Munachi.
Yes, hello, sir. Yes, please. Question about this newspaper purchasing.
Yes. Okay. Now, okay. Speak.
Okay, so why is it on the debit? Like, why is the newspaper on the credit side?
Okay. Let me explain. Yeah. See the concept here. When you say bill is like a check. Are you there? It's like a check. So the customer gave the business a check about their debt. So automatically what it means is that it's reducing the customer's liability. Are you there? It's reducing the customer's liability to the business. So the debt balance would have reduced. That is bill receivable. Then bill payable now is that the business has paid a check to the supplier, telling them that the money I'm owing you has reduced by this amount of check. So in that case, this is the money they are owing the supplier, but they gave them a check of 10,690. Automatically, what it means is that the business liability with the supplier has reduced by that amount of the bill. Am I making sense? So Bill payable or bill receivable are reducing liability. It's reducing customers' liability to the business, and it's reducing the business liability to the suppliers. Are you there?
It says like this shape is like check receipt.
Yes, it's like check receipt. But don't forget, they have not gone to the bank to go and cash the check. But it's only just saying that they have received the check. So the business in their own book, they will say, oh, I've paid this person. But the person have not gone to the bank to cash it. So now see what happened now. The customer paid the business a check, a bill, which is bill receivable. Now see what happened in the next part. They now said that bill that they received from the customer, hello, the bill was dishonored. Can you see that there? So it means that that bill that was dishonored, you will bring it back. How do I mean? You will use it to increase the customer's debt to the business. Because initially when the customer when the customer gave them a bill, in their book, they've already written that the customer has already paid. The customer is no longer a debtor. But when they got to the bank now dishonored it. So they will come back to say, oh God, you are still owing me. Oh. Am I making sense there? So that's the bill. Dishonored what? How much is it? Then the next one is bad debt written off. How much is it? Okay. So let's quickly go. It says a debit balance in the purchase ledger. That's the purchase ledger there. This purchase ledger, this sales ledger. Am I making sense there? Good. The debit balance in the purchase ledger. Okay, debit balance in purchase ledger transfer to what? Sales ledger. So see, the debit balance in purchase ledger. Are you there? I'm taking it to where? Sales ledger. Are you there? But please, I want to understand the accounting principles behind this. Listen carefully to get the principle. What is the debit balance? 52, Abi? Is here. I want to remove it from here. And I want to bring it to here. If I remove it from here, won't I cancel it? Yes. For me to cancel it, it means that I will bring it to this side. Am I making sense there? Just assume you are understanding. I'm going to give you a shortcut to it, then you remove. Then it means I'll come and say transfer to what? To sales ledger. Can you see that there? Automatically I cancel this one. Now look at what I will now put here. I say transfer from where? From purchase what?
When I'm stopping.
Just give me another 1 hour.
No, stand
or less.
There are two people are waiting for you now. I not just you don't stop.
What's the time?
It's already wrapped.
Okay, when I finish this, I'll wrap up. This one is almost done. So in another 10-20 minutes, I'll finish.
Go.
So wait.
I'm going.
No, go here. You can't go anywhere. Okay, so now if you go and check your formats, I wrote transfer for you, Abi. Check where the transfer was. I'm coming 10 minutes, less than 10 minutes, less than. Transfer, you see it on this side, Abi. Then you also see transfer on this side. So if you don't want to overthink, just know that anytime you see transfer is always on the debit side in which account? Receivable. And it's always on the credit side in which account?
So we should not write.
Just put it on both sides. You get? That's the concept of transfer. Yes, now they will both increase the ledgers. Okay. Monachi, can you mute? Okay, thank you. Now let's continue. It said, as at June 30th, the trade receivable ledger balance were, can you see that there? As at June 30th, what does that mean? At the end of the period now. At the end. Are you there? See, any balance you get at the end is called balance brought down. Am I making sense there? So, at the end now, they now said the what? The trade receivable, where am I now? The trade receivable ledger balance was this debit. So we'll come to the debit side, call it balance brought down. How much? 6. And Balance brought down 30 what? 36. For the receivable, now let's check out for the payable. And why the payable was, okay, they were what? On the credit side, balance brought down 15,690 and balance brought down 260. Now please, if you check the principle I told you earlier, I said for every time there is a balance brought down, it means that there was a carry down. Go and check. At the last day of the descent, I did a cross somehow. Carry down becomes brought down. Carry down becomes brought down. So what it means is that this brought down has a carry down here. Are you seeing there? So I can just come here and say balance carry down. How much? 260. This brother has a carry down here. Balance carry down 15,696. This brother has a carry down here. 36. This one also has a. So by the time you sum up these two, you should have an equal figure. I just wish we have enough time. There are a lot of things I wanted to cover up with you guys today, but it's obvious that. But it's also good so that you guys will, since you are just starting, let's not overload you also. Let's not overload you. So then please, I would like us to discuss, it might not be now, but I would like us to discuss on the during the week classes. Yes, during the week, it might not be this week that we're entering now. You get? So during the week classes, so that you can, because the targets, I always give you guys a very high target for those students. It's not just, we should leave all stone unturned. We should be able to destroy everything. So that even though you are in the exam hall, there's nothing that can happen. You must be able to break through it. So we'll plan on that, but I'll try to also look at timetable for your exam.
The thing is, what if the timetable comes on Monday?
If the timetable comes on Monday, we have to start the weekly class. That's why I'm just putting it. Yeah, I'm just putting it in your mind